Has this ever happened to you? You waited all day for one perfect setup. Price finally comes to your zone and then you enter. But then you get stopped out by just one pip. Only to watch price go in your direction right after and you were just used as liquidity. Well, that used to happen to me all the time.
Yeah, boy.
Until I backtested for insane hours and found a few confluences that will make this never happen again. So I'm not going to waste your time. Let's get straight into it. Supply and demand trading is great. If you really want your zones to hold, you've got to add some confluences. For example, having a fair value gap right in front of the zone is very important. Okay, so here's my demand zone. As you can see, just this bearish candle, and then you have a fair value gap just in front of the zone. Now imagine how much power this has if you have an imbalance and then a demand zone right below it. So you can get the perfect entries, okay? But if you want to make it even more powerful, you could add support and resistance. So let me just mark out the middle of the zone, for example, and now you look for resistance, okay? As you can see, you have nice resistance over here, nice resistance over here, here, and yeah, just it's really good. Okay, I'm not gonna go too far, but you get the point. Okay, it's insane, and with these confluences you can get perfect entries and high risk to reward trades like this. Okay, but what brings it all together is having liquidity sitting in front of the zone. Okay, without that your trade might as well just be invalid. So as you can see over here, I had a strong push up, creating that imbalance and that demand zone, then a push down, and then a push up, push down. So my liquidity in this situation is over here. But your liquidity is not valid unless it takes out its own high. So if it doesn't take out this high, it does something like this, comes up, comes down here, and then comes to your zone. That's invalid. Okay, you need your liquidity to take out its own height to be valid on a demand zone example. So what makes it even better that it took out this high as well for a double confluence, and then this will be an A plus setup. So let me just quickly delete those, and I'm going to talk about my entry a bit closer as well. So I have lots of different entry models, but I'm just going to talk about how I entered on this trade, but I'm going to go over all of them later in this video. So as you can see, this was a pretty simple, it's very simple how to enter. So you would not enter if this candle closed bearish. Okay, you would enter on the first bullish candle to react from your zone. And also your candle is not allowed to close inside your zone or go through it. So what I mean by that is if your candle closed inside this zone, it will be invalid, or if it wicked through here and then it came up, that will be invalid as well. So keep that in mind. It has to just wick on the zone and it has to have a reaction from the zone. So now that you got all that in mind, I'll show you how I used all these three confluences in a single trade. So I have this set up right here. As you can see, here's your demand zone. You have a fair value gap, small one right in front of it, which, like, imagine how much power this actually has. It has a fair value gap and a demand zone. Price really wants to come down and fill both of those in. So over here, you also have insane resistance. As you can see, you have resistance over here, here. So this like just perfect for a place to take a buy. You also have resistance here and some other resistance back here as well. So this is just perfect here. And you have your liquidity. You have very good liquidity. As you can see, if it did something like this, would be invalid, but it created more liquidity twice, and then it took out the high, then came back to my demand zone, and then I'm going to talk about the entry. But as you can see, perfectly beautiful structured trade, took out all these highs, even this high, and then this gives us more bullish bias. And talking about the entry, as you can see, you would not enter yet just because it was a bearish candle. And as you can see, this was a nice rejection, okay? But you would not enter yet. You would enter on the first bullish candle to react from your zone, and you would enter now, okay? You would enter on this candle over here, have a 30 pips max stop loss in this case. Otherwise, you would have a 1 pip below the candle that wicked to your zone. But in this example, it's just 30 pips max stop loss. A take profit at this high for 1 to 11, and this trade here hit, like, this is just insane. Okay, so I have lots of different entry models: break of candle and flip entry and directional close. In this example, this is a directional close, but I want to explain those other two confluences because without those you might actually miss out on a lot of high risk to reward trades. So I'm going to go over them right now. So I have a perfect setup here. As you can see, a supply zone, a fair value gap, which is already actually tapped, but it's still a good resistance area. And let me check for resistance, which I haven't actually checked for before. Not a lot, but it's not very crucial. It just makes your zones held for 100% if you have all those other confluences. So resistance here, resistance there. So there's still a very good area to buy from. I mean, to sell from. So you would enter here as a break of candle. So a directional close over here would be right here. You have your stop loss 1 pip above this wick. So that's 6.5 to 7.5. As you can see, 7.5. But in this case, you would enter as soon as it broke the previous candle. So let me make a quick drawing example. As you can see, this is this candle that tapped to the zone. Next candle opened where the previous candle closed. It made its top wick, and then it came all the way down over here. For example, it came over here. You would not enter yet, but as soon as it broke this level, you enter. Okay, and this could be very useful in some situations. As you can see, I have a break of candle entry over here as well. You would enter over here, 30 pips. Actually, not in this case. You would have just 13.6 to 14.6, and as you can see, look how much advantage I had on this trade just by taking a break of candle. Like, imagine entering a directional close. Yeah, I can't even imagine that. So that's why I have this confluence, but I've also have flip entries, which is very, very good. So I have another than A plus set up here, my demand zone. As you can see, then there is a fair value gap here, very, very small. Let me check for resistance real quick. As you can see, resistance here, here. Great one over here. So this is a great area to buy from. Also, your trend bias is extremely good. As you can see, we took out all these highs into this like lot of clear space. So you have lots of bullish momentum. So a flip entry, actually, let me explain this quickly as well. As you can see, push up, strong push up, creating my demand zone and that imbalance. Then you had a push down, creating my liquidity. It needs to be like an obvious low on a demand zone example. It can't just be like one candle and then you call that your liquidity. It needs to be an obvious liquidity. Then it needs to take out its own high. On a supply zone example, it needs to take out its own low. After all that has happened, you need directional move to your demand zone. Not move like this, like very choppy, slowly coming to your demand zone, and then like that. So this is an A plus setup. Took out this high also, so very much bullish potential. But now on the entry model, so this will be a directional close, 30 pips max stop loss, as you can see, and then TP take profits. I'm going to explain later, but as you can see, a break of candle would be here. As soon as it broke this candle over here, stop loss max 30 pips. But now the most important entry on this trade would be a flip entry, which I actually took myself as well. As you can see, I took it live in Dubai. So on this example, you would have it at the wick, not 1 pip stop loss at this point. I know all this stop loss kind of thing is very confusing, but trust me, usually you just have it 1 pip below the candle. But in this case, I will not have it 1 pip below the candle, because if I have it 1 pip below the candle, it will be below the zone, and that's just pointless. So this will be a flip entry. Let me make a drawing example as well. So let me just make it identical if I can. So this is my demand zone as well. Now this here is this bearish candle that tapped the zone. The next candle opens when the previous candle closed, so it opens over here. Let's say it's let's say it made something like this already. It starts to come down, and then it came all the way down over here. This is what it looks like right now, and then it wicked. Okay, this is a awful drawing, but then it came all the way back up, as you know, this part here is all bearish, okay, this wick part, and it needs to come deep inside the zone, because that just shows the zone has so much strong potential. And as you can see, it came all the way down over here and then flipped bullish, and as soon as it flipped bullish, you enter the trade. Okay, you would not enter somewhere over here, you would enter as soon as it flipped bullish on where the part it opens. So let me just explain my take profit areas here as well. So as you can see, it's pretty simple. I'll have my take profit 2 at here and my take profit 1 over here. So on my strategy, I had take profit 1s, take profit 2, so I can go very, very high risk to reward trades. So that means trend is very important for me. That's why I analyzed this before. But taking TP1 is very crucial. So when I take a take profit 1, I have my break even point then, and then I take 50% out. After my take profit 1 is hit, then I just leave the rest 50% running. And as you can see, I hit an insane trade over here. But yeah, I have nothing else to say. This is just insane, bro. So if you want to learn more about this, I have a Discord free server. Please join that.